But as promised, let's focus on the banking universe now. Are banks back to the golden era? Are asset quality woes, unsecured lending concerns a thing of the past? Let's discuss this and more with Vishal Goyal, the head of India Research and banks analyst at UBS. Hi, Vishal. Good morning. Thanks a lot for joining in. Well, before we get to talk about PSU, private banks, and the entire industry, I just wanted to ask you about credit growth. That's yet to show signs of picking up. In fact, it's moderated in the last few months. What kind of credit growth are you all working with? And if you could tell us, do you expect things to pick up from here on?
Yeah, hi. Thanks for having us. Clearly, I think the impact of tightening, which we have seen in last years, plus the growth slowdown, which we saw in the last half, it's reflected in the slowing credit growth. I guess from here, like from the current 10% number, we are expecting it to go towards 12% by the end of this year. Multiple tailwinds we have for credit growth this year. We have the consumption stimulus from the government, which should start, reflecting somewhere, this year. Also, the liquidity easing that also enables banks to start lending more than what they've been doing. Clear constraint has been deposit growth. That also generally would start improving towards end of this year. And also, I think if you look at the risk weightages from RBI recently, they have in fact relaxed all those. So the overall environment, especially from the regulatory point of view, is easing plus liquidity. I think this should start, reflecting in the credit growth over this year.
Vishal, thanks for joining us from the sidelines of your conference. Thank you very much. This is Reema here. Last month, you all turned bullish on some of the PSU banking names. So I can see an upgrade on SBI to a neutral, an upgrade of Bank of Baroda to a buy. Tell us the thinking on PSU banks right now. What's the narrative playing out?
Yeah. Hi, Reema. See, I think we've been cautious on PSU banks, especially due to their lower profitability and their ability to keep profitability. So they gained because of falling credit costs. Generally, their operating profitability has remained weak. We have reached a point where their profitability, especially in terms of core PPOP, is stabilizing. Plus, there is no major pressure from corporate lending. Also, their exposure to retail unsecured is generally small. I'm talking about the overall pack. And I think all those, again, gives us some confidence on their credit cost. And valuation, given their underperformance, I think have become reasonable. So those were the views from cautious to more like a neutralish view on state-owned banks. We still prefer private sector, banks, as a pack in terms of overweight, just to clarify that.
All right. Speaking about the bank that's been in focus for a variety of reasons, may not be the best, is IndusInd Bank, and a lot of news flow out there. But a stock that was at around 1,600, today it's less than half that price. Give and take everything, do you think bulk of the bad news is in the price? Or do you think things are too fluid and, there could be a negative surprise coming out of somewhere that you'd rather stay away?
Yeah, Nigel, sorry, I'll not be able to discuss stock specific due to, our internal compliance. I think, yeah, so maybe I can make a general comment on the industry, but maybe not stock specific.
But you want to make a general comment on IndusInd Bank? Will this have any kind of ripple effect? Because what we're seeing right now is that incremental bad news is not further hurting the stock price. Like, for instance, today there are allegations of the SEBI investigation throws up insider trading. It's not that the stock has fallen further. So, I mean, from a shareholder point of view, how should they go about thinking about a stock like IndusInd Bank without getting into specifics?
See, yeah, again, I think without discussing stock specific, I'll tell the way I would look at this is we have had similar cases in the past, right? There have been a couple of such banks who went through a similar journey, I mean, in a different form, but they had serious losses, change in management, regulatory interventions. And post that, what typically happened is you see a consolidation in metrics, like the growth disappears. The focus goes back in terms of protecting the depositors versus shareholders. That generally is the script from regulator. And in the, generally the period followed by maybe 18 months to 24 months, in that period, you typically see no activity, from such companies. In terms of growth, generally it's a cleanup period. So that's been the case in previous, similar cases.
Any big anti-consensus call, by you, not on stocks, but even in terms of a trend? I can see Bajaj Finance, for instance, is a sell for you, and that seems anti-consensus to me.
Yeah, see, again, I think if I think about broader sector themes, the way we looked at it is we've been cautious on the sector for last 12 months or more. We turned constructive, recently, and clearly there are reasons for that. I think when I say anti-consensus, probably when I look at valuations, which is still below average for the sector, I think clearly there is room for making money in this sector. And we think the regulatory landscape is turned favorable for the banking sector. Like we have seen multiple tightening in the last 2 years, which is getting now relaxed. If you see, incremental last 3 months, I feel more relaxation could come through in the next maybe 12 to 18 months. Second, I think the consumption credit cycle, the unsecured credit cycle, that also has seen like NPL buildup. It's probably in the last stage of cleanup in our view, as per the data we are seeing. So the pressure on credit cost also should start easing from here. The only thing which is left is NIM compression due to rate cuts. That I think will have to factor in this particular year. But otherwise, I think if I look at the compounding on ROE, I think the sector should be comfortably compounding at anywhere between 13 to 15% on ROE and reasonable valuation. So, yeah.
As a house, how many rate cuts are you all factoring in?
See, our economics team is expecting 75 bips of additional rate cuts this year.
Okay, so Vishal, hi, Surabhi here. Just to kind of recap the main headlines from this. For this year, what is your expectation of credit growth system-wide, banking system-wide, given the rate cut expectations? And just purely in terms of growth, which kind of lenders could be ahead?
Sure. See, we are expecting 12% credit growth. So this 10% should improve towards 12%. That's our view on the credit side. We feel consumption credit would drive this growth because we have seen multiple, I would say, stimulus waiting actually to come through in the next 12-18 months. That should support growth. Falling interest rates, the housing cycle itself, that also should accelerate towards the end of this year or second half of this year. So a lot of, I would say, growth will be visible in the second half of this year in terms of loan growth.
So finally, for this year, the next 12 months or so, the biggest driver of stock prices, of course, is going to be, the credit metrics, credit growth itself. What else to watch out for? What will be the biggest factors that will lead to perhaps the best delta in stock prices, whether it's banks or non-bank lenders?
Sure. See, I think growth will be, as you said, will be the biggest factor because we've been seeing lack of growth for some time. I think the second factor will be stability in net interest margins because currently there's a lot of uncertainty around how much the NIM would fall due to the repo rate, basically how much banks would be able to retain, right, or offset versus the repo cuts. So that stability also will be reassuring because then people will have some visibility on FY27 NII and FY27 NIM. And lastly, of course, the last leg of unsecured credit cycle, that's still going on. I think the incremental data points are encouraging, but once we see that kind of fully stabilizing, then banks will also be able to grow the unsecured credit with more confidence going forward. So that's the other data point to watch out.
Thank you, Vishal. Great conversation. Enjoy the rest of your conference. Look forward to the next one.